Company expansion plans can be a capital-intensive process, but Kenyan banks have devised a way to cut costs through agency banking. They approach businesses such as this to become their agents. People can deposit and withdraw money as they would in the banking halls, but without the cost of brick and mortar to the bank.
You see, ultimately, banking services, banking today, Beatrice, is not about the place you go. It's about what you do. So I don't want the Mama Mboga to leave Kisumu to go somewhere else, or Kondela Market to go somewhere else. I want them to come where they are and do the transactions. In fact, that Mama Mboga can become an agent. That is how to enhance the level of financial deepening in our markets. If we cannot do that, then we will not be able to be competitive. You get me? So we have to build the platform. And in an agent, you can do many things. You can deposit money, you can withdraw money, you can get your mini statement, you can apply for an account. You cannot get an loan applied, you can make your applications, correct? You can settle a bill, you can pay another third party in an agent. So customers don't have to come to the bank.
You can see it.
Patrick Musembi is one of the top equity bank agents in the Central Business District. When he started his business 2 years ago, he did about 5 transactions a day. That has now tripled with 3 additional outlets. Like many other agents, he also serves customers from other banks, such as KCB and Cooperative Bank. So how exactly does agency banking work?
What happens is, when you come to my agent, for example, you want to deposit cash into your account. To me, to deposit that cash into your account, in my account, the account which I'm using to trade, it must have cash. For example, if you are depositing 10,000, I must have 10,000 in my account in order for me to deposit to your account. To do the transaction, when I initiate the deposit account, that money moves from my account to your account. Then you leave me with the cash.
The latest data from the Central Bank of Kenya shows there were over 20,000 agents by September 2013, while the number of transactions done by the third-party agents rose nearly threefold compared to the same period in 2012. The greatest growth was, however, registered on the value of transactions done, which jumped 154% to 366.7 billion shillings.
We see now the agents are doing more business. They're transacting more than all our branches put together, all our ATMs and other electronic delivery channels. And sooner or later, we are seeing as if 75% of all banking business will be done by the agents. As we move on, we see the agents assuming the function of brokerage, where the trading of stocks in the Nairobi Stock Exchange can be decentralized and happen in the villages, where people don't have to travel to Nairobi to look for brokerage firms.
You know, if you look at our agents today, we came in from 2,000 agents 3 years ago to 7,000. Our vision is to double our agents every year, sorry, correct? That's what we have to do. If you look at our business overall as banks, now not as KCB, we believe that today we have 30,000 agents overall. We believe that in 5 years, we will build 300,000 agents.
The agency banking model has not only helped banks improve their cost-to-income ratio, but has also expedited financial inclusion in East Africa's biggest economy.
It has had significant impact on the bank. If you look, we have opened 10,000 agents, massive capital expenditure, massive expenses of branding these agents, giving them the POSs and connecting them. But you will see during that 2 years, we have been able to reduce our cost-to-income ratio from 50 to 48. So I'm seeing that the biggest impact is making the bank very efficient and reducing the huge cost of brick and mortar.
The benefits seen in the last 3 years since agency banking was introduced in the East African nation cannot be understated. But has this model pioneered by Equity Bank, Kenya's biggest bank by customers, been all rosy?
Oh, there's been huge challenges. The first one is dealing with the technology. And remember, this is really, for it, because it's real-time online system, it requires very reliable technology offering to ensure that there is seamless connectivity and real-time online 100% availability of technology. That, I would say, has been the biggest challenge. And of course, the hazards, the moral hazards of really dealing with the cash in a decentralized way. Again, you have to overcome the challenge of things like fraudsters.
By leveraging on third-party businesses like that of Musembi, Kenyan banks have mobilized cheap deposits from customers who were previously sidelined, and they have changed the face of banking.